What is going on, superstars? Today I'm going to teach you exactly what you need to know so that you can start trading a reversal pattern. And this is the easy way of how you can start trading and you catch a huge pips in the market. So a reversal pattern, it is the one trading way which I have been using since I started to becoming profitable in the market. When you trade a reversal pattern, it's better than trading a continuation because it gives a lot of pips when you catch it, when the market starts changing its direction from the bullish to the bearish market or from the bearish to the bullish market. That's what we call a reversal trending market. So whereby you will get exactly when the market is starting from the bearish to the bullish market is when you look your entry. So make sure to stick around with me at the end to understand three things what we have to use. The first thing what we are going to use, we are going to be looking at the market structures and the demand and supplies, the insufficiency in market. So those are the three things what we have to be looking to get a good entry point when you are trading a reversal market. And I have got for you a big deal that will help you. If you watch this video up to the end, you will win to join our VIP program. What you have to do, make sure to find the emoji in this video, then you comment it in the comment section, the emoji what you will see. This will help you to join our VIP program. I'm going to put three emojis. One emoji is going to be for our ebook giveaway, and this ebook is not for free, but when you comment that emoji what you see, and another emoji is for our coaching program. So you will win our coaching program. If you see that emoji also and you comment it, it can help you to grab our coaching program so that you will be getting it for free. Make sure you do one thing, you watch this video at the end to grab that chance, and another emoji is going to take you directly to our VIP program. Yes, you will join the gurus. Will be trading with us. When we make profit, you make profit. If we sell, you sell. If you buy, you buy. Make sure to do that in the comment section. And if you have any challenge, tell me what is your biggest challenge when you started trading. I'm going to walk you a step by step to show you exactly how you can catch this reversal in high time frame and low time frame. So let us dive into the chart and I show you. All right, now we are going to look what we call the market structures, and we see how the market structures are being formed and how they can tell the story of the market, or how do we use these market structures to read the story of the market. So what are the market structures? Market structures are the price movement whereby the price hit on the certain key level on the certain point and then it makes a reversal, or when the price change its direction to make a pullback or to change the moving direction. That point, it's what we call a structure. When it comes to trade a trend reversal, we have to identify the structures of the market whereby reading the price story, where the price is heading. Now here we have this market structure. If we can see very well, we have that the market, it's moving, making the lower lows and lower highs. So the market, to start making a structure, the candle will be moving like this. Let's say that this is our 4 candle. So this our 4 candle inside in minute 15, in minute 5, we will be seeing this market structure, that the price moving low, moving high, moving low, moving high, moving low. This H4, it can be a sell candle. So this sell candle, it will be making inside in minute 15, minute 30 in H1, making the structures. How does the structures formed? The structure is formed when the price move with one candle like that down, and then move another candle like that, and after it
adds another candle comes above like that. Let's say that this we have a bullish engulfing pattern. This bullish engulfing pattern, it have formed a key structure here. So this is a structure where the price have turned from. For example, you can see this point here, that area, it is what we call a structure. Any turning point on a certain time frame, on the certain candlestick, on the certain candlestick chart. Are you getting the point? When you see any point of U-turn, that is a structure. That is what? That is a structure. Whenever a price makes a turn, that will be a structure. So there is what we call inner structures and outer structures. Those inside structures or inner structures, that is what we call minor structures. And those big structures, that are what we call swing structures. For example, if we can see very well around this area, we have these structures here. So this is what we call minor structures or the inner structures, that the points of the price U-turns which are not being recommended to focus it on. Are you getting the point? That we don't take too much effort on them to identify them. Are you getting the point? Now you can see here we have a minor structure. Are you getting the point? We have this minor structure here. So this is a swing structure which is presenting what? Presenting the movement of the direction of the market. That what causes us to know that the price now, it is being controlled by the sellers. The structures are the one which are helping us to understand who are controlling the market, whether the buyers or the sellers, because the market, it is moving on the demand and the supply. Demand and the supply, it means that those are the buyers and the sellers. Are you getting the point? When the demand is high in the market, which means the buyers, they are going to be needing too much. The buyers, they are going to be holding that kind of the asset. They have it. They want to what? They want to start selling it, by which means the demand will be high and they start selling that thing. Are you getting the point? That people who are looking to buy it, there are too many, and that asset to be sold is too little, which means everyone who is having that asset will be catching it, not selling it, which will lead to increase the demand. And then the supply, which means the sellers, there will be too many in the market. That let's say we have the rice on the market. Now rice sellers, we having many sellers. We're having many wholesalers which are selling rice on the market, which means the buyers, the retailers who are needing to buy the rice, are you getting the point? They are little. That will lead the increase of the what? Of the supply in the market. Are you getting the point? And then people, they will start buying those things at the low, cheaper price. That's why you see that the supply makes the price to go down, and then the demand makes the price to go high. Are you getting the point? That's why that the things, when they increase or they get saturated in the in the certain area. So when they get saturated in the certain area, the price of that asset, it will drop down. For example, take a look on your area where you are living. If people who are renting rooms or houses or real estate, if they get to not be seen anywhere, the price of those assets, lands, real estates, room for rent, they will be what? They will increase. If those people are looking the houses to rent, to buy land, to do what? If they become much in the area, and those assets they are not where to be seen, the price will increase. That's what we call demand and supply. And when it comes to our chart, we read them according the structures. Which structures? You can see the market when it turns, makes the low, makes the high, makes the low, makes the high. That is when we can read the structures. And the structures, those are the U-turns of the price movement. Are you getting the point? In any time frame, minute 1, minute 5, minute, any time frame, those structures are there. You can see one daily candle of the bullish indication can show you exactly inside of it. Minute 5, minute 1, you can see the price have been making a high and high lows. Are you getting the point? It have been creating the structures. So that's why if it comes around this area, you see that how do we come to say that now the price have break the structure? Which means if the price has break the structure, this is the point of the structure. If we say that the price has respected the structure, this is the point of the structure which has been respected, that it has been not been broken. Now as well, we can see that here our structure now, we have the price is moving, making the lower lows and lower highs. So when it comes to trade, the trend reversals, are you getting the point? We have to identify this area. So when the market is making the lower lows and lower highs, it's when we start identifying the price where it's moving, and we see the market also making the high highs and high lows. This will be our time to increase our our equity. Is going to be our time we double that profit. Are you getting the point? So when to execute and when to not execute. We execute in the market exactly around this area. This is the area is when we have to identify, and then we take the change, the reversals. Are you getting the point? So when the market is making the lower lows and the lower highs, this in this structure, we wait to see the market now has shifted from this downtrend, and then we start catching this move. So why are we needing to trade a reversal? We want to trade a reversal to get a high pips in the market. When you catch the price on its early stage of changing direction from the bearish momentum to the bullish momentum, it will lead you to make a lot of the money in the market. So this is the only area when we have to look, and then we focus in, then we jump into the market.
All right, we have seen how the structures are moving and how the market is always move. That is the only way how you can read these market structures. So we have to look what we call insufficiency in the market. Are you getting the point?
So now here we have insufficiency in the market. So why do we consider insufficiency when we are trading a reversal? We consider insufficiency in the market. Insufficiency in the market, it's telling us that those are the key points which are being left behind without getting filled. Remember, when the market is moving, it have to make sure seeing that there is no any imbalance in the market. Insufficiency, we can call it is an imbalance in the market. So when the market is moving, making the high highs and higher lows, when the market is making that, there is some stages, there is some points where the market can move abruptly like this at random at once. So when it moves at once, it have to come and feel this point which is have been what has been left behind, so that they can make balance in the market, that the buyers are not getting saying, oh, they are like quarreling, oh, the market has just moved like that. Are you getting the point? That many people who was willing to keep buying that asset, they are still complaining. That's why they come and make what? They make equal, which means if you have passed the buy, they will bring the market back. Also, you buy, you get certified. Are you getting the point? They have to feel everything, that no one left behind. Are you getting the point? No one crying that, oh, the prices have moved. For me, I have not exchanged. Are you getting the point? That's what we call insufficient. So the price, if you can look around this area, we can see that the market came very well, making the high highs and higher lows. It moved to reach at this area here. When the market hit that area, it started making the lower lows and the lower highs. But here behind is when we left what? We left the candle that what makes an order block. You can see that when the market reaches at this area, that all the candles was been retested. This is what I'm trying to say. You can say that the market, this is a candle here at around this place. This is the one candle, and another candle comes and it add on like that without any wick, which means this place from this area to this area here, it has been not been filled. If you go to the line, to the low time frame, but which means here we have created what? An imbalance, which means the price have to come back and fill this gap to make what? To be balanced, that those people who have not took a chance of buying this market here, the market will come, so they don't complain anymore, so that they buy also the price and it moves back upward again. That's what we call insufficiency, that we look the places which have been not retested, which have been not filled. And if all the places has been filled, there are two things: market to come and bypass all of it through. There is no issue, there is no big point, the market to come and respect the where it has been respected for a long time back. If you can see here exactly price here, it what it made filled in. Let me do like this so that you can see it very well. If you can see at around this area, our price moved very well after leaving this imbalanced place here. So the price here, we had also order block, but you can see the price came and filled it. Here we have also an order block at around area, the price came and filled this area. Here we have an order block, the price come and then just bypass. So there is something where you have to understand here, that if you see in the market there is something like this, we have a triple bottom and we have a triple bottom, we have a double bottom, or a triple tops, we have a double tops. Are you getting the point? These are the sellers. This is what we call the liquidity. There is some money which are lying here, and you can see that if we have this triple tops here and we have an order block behind, but which means this, it will act as magnets. Here we have an early sellers, that this, it will work as a liquidity to pull the market come back, and then what makes these orders to be filled. Why? Because at this area here, we have a lot of many orders. Let's say that the orders which are here are like 1.5 billion, which are orders which are left here, and then the market will not come and fill this 1.5 billion without exchanging with what? With other traders. By which means, if you see when you click here, if you see you put here your entries for buy, are you getting the point? Just know there is someone entry here for sale. Are you getting the point? So this buy will not be executed if there is no someone who is selling, because if you are buying from A who are selling. Are you getting the point? For you to buy, this A person will be selling to B person. I think you have got that. So that's why you can see that the market can come and create these people here, creates us who will provide as a liquidity. So if you can see that here you have got your pattern and then you want to make a sale, maybe you have seen here that the market made a high and high low, you draw your trend line, you wait the market breaks out, you execute here, and then the market gives you like 20 pips and then it reverses to you, you have worked as a liquidity, because here there is trillions and trillions of the money. You are the one who have to buy some of, you have to sell your orders to them, and then they can fulfill their orders. Are you getting the point? Got that clear? So we have to look at this insufficiency, that the market which has left it behind, which have not get retested, which means that place it's where too much areas, too much orders which are slipped there, too much money which is slipped there. You have also to make sure you slip your money with the big slipper monies, or let us say that the institutional traders who are laying their money. You have to identify those key areas and then you lay your money with those people. Are you getting the point? So that's what we have to look, the insufficiency key points, that those points which are left behind, which were not getting retested, and then we do what? We put our money there. So if you can see around this area that all areas was filled, do you see that these areas of demands, all of them, this candle came and filled everything here. So there is no need of price to come back at this area. Are you getting the point? So it can go up. If it comes back at this area, it will be able to bypass through in and then not respecting this area anymore, because it was already what? It was already get filled. I think you have understood that, bro. If you can see very well at around this area that the market came making the high highs and high lows. These areas was filled, but this area here was not filled. That's why the market moved up and then tapped in here where there was insufficiency, or what we can call that the order block. Are you getting the point? And also here we have a favorable gap. You can see this favorable gap. Also here we have a candle here, and also here we have a candle here like that, and then we have here an order block. So this favorable gap, are you getting the point, can be combined with this order block so that the market can come very well and tap to one of these, and then we continue to go upward. But the most cases, the price will respect more this order block, and then it bypass what? And it bypass to the favorable gap. This takes me to another pro tip. What I want to give you here. So always you have to identify and read the price characteristics. There are certain pairs which are not respecting the order blocks. They are respecting the favorable gaps. There are certain pairs which are not respecting the favorable gaps in a low time frame. They are respecting the favorable gaps in higher time frame. There are certain pairs, they are not respecting the order blocks and the favorable gaps, but they are respecting the structure retest. Are you getting the point? Those are the pro tip what I can giving to you. So what are the structure retest? Structure retests are formed like this. If you can see here, what we can see that the market, it have come very well here. There is what? Low high, and the market moved down, break the structure here, came back, and then made a double top here. You can see that the price, many times it respect double tops and the bottoms. It does not respect the favorable gaps, does not respect break and retest. Are you getting the point? Or what we can call support and resistance. It respects only support and resistance. All of those, you have to read the characteristics.
Alright, you have seen right now how insufficiency in the market, how they get formed, and how they can help us to get exactly where to the market, where it will be rebouncing back. Because this insufficiency, it tells us exactly where and the big orders they will be placed. Are you getting the point? And we get those sniper entries. So let me show you the entry criteria, what you will be using to catch this best reversal in high time frame, and after we use the same concept in a low time frame.
Alright guys, so now here we have our downtrend, and we can see that the market is making lower lows and lower highs. When the market is making lower low and lower highs, this downtrend is going to help us to identify that what we have to do. The market now, it is on a downtrend. We have to look for the buy opportunities. What we have to do after identifying this is when the time we look for the buy opportunities. Are you getting the point? We don't look the sell opportunities when the market is making the lower lows and lower highs, by which means we will be looking the continuation, the continuation of the trend. But when we are trading at reversals, we have to look the trend when it changes its direction. That's why we look for the reversals. We have to identify what? We have to identify the downtrend or the uptrend when we are looking for the buy, and when we are looking for the sell opportunities, we have to identify a downtrend. Now here on the screen, we have a downtrend. This is when we look for the what? We look for the buy. As well, we have already seen the market have been making the lower lows and lower highs when it's moving downwards. So we have to wait, and we see that the market, it have come and then make this low here and takes off this low. If you can see very well that this low, it has been taken out. After that low get taken out, we have to see that the market make low and then it made a high here. After making a high here and then come and takes this area, you can see that here we made a high, we made a low, we made here an equal highs. Are you getting the point here? Here we had an equal highs. We have to consider this high here and this high, all of them, they are the same. We have to extend this line in front, and then we wait until the market takes this high here. So after when the market takes this high, we know that the market now, it have moved from this downtrend to the uptrend. So this is when we come and we look insufficiency around this point and this point. Now, if we can see that that the market now at around here, when it was making this area here, let me do like this. So we can see around this area, when the market did this here and forms this candle here, it moves upward. But also this candle here, there was not insufficiency. Are you getting the point? That the candle here, next candle which was added here, it was what? It was filled this area, that the market left everything, got filled. And another candle here which moved here from here and filling and goes upward, that it is the only one which was left behind unfilled. That's why we come in and then we identify the candle here which was unfilled, or the any place which price was not filled. That is going to be our point of interest. We wait the market to come and tap in that area. After tapping that area, it's when we look what? We look to execute. So this is when we do what? We execute around here, and then we take the price to the what? To the upward. So you can see that this is when we do what? We execute the market. After all of these criteria got confirmed, we have what? We have a break of the structure here to continue to the downwards, and we see that the market moves again and come here. We had what? We have a break of what? Of the structure. When you get this as break of the structure or a change of what? Of character, so we know that the market now, it have shifted from the selling side to the buying side. So it's when we look to buy. That is when we look for the buy. And when we see this, so we doesn't need to see that when the market hits this area and then we are going to execute, we don't need to add another more confirmation at around this area. There's no need of another confirmation. Like what we see, that when the market reaches here at this point, we have to look something like this, that the price go down, comes up again, break this high, this low was broken, and then we identify the order block insufficiency here or the favorable gap, and then we wait the price to come in, and then we take the price up. No, we just use exactly which has happened here. That will be enough for us to be confirmed, and then we use our pending order here to execute the market. So let us go and see the selling example. All right, at this time in our front we have what? We have the price now. It has been making the high highs and the high lows. So this is when we start looking for the selling opportunities. We have first to identify the uptrend in the market, and then we look its change of the direction. We can see that we have this high here, we have this high, and the market have taken them out or swept them up. So we have to wait also to come and take this low here, guys. Are you getting the point? Why we wait this low here? Because we count this one, it is what? A swing low, which has lead the price to go up and take this high. So if the price come and break this structure, by which means now all of these points, they are going to be broken, because when the price was moving from this side, it have been respecting them, but now when the time starts to validating them, this will show us that now the price has changed its direction from the buy movement to the downside. So we have to wait also these two things. The price should be breaking up, and also the price should be breaking down, and this when we look for our second criteria of insufficient around this area. We wait the market to come and tapped to our order block, and then we sell downside. That is what we see. That is when we look what? We look to sell the market. So let us go and we see the entry types. When we are waiting the price is moving, going upward. Are you getting the point? And then we want to sell. When the price making the downtrend, we have to wait to buy. Are you getting the point? So this is the how we execute in the market. So when you can see that the price has been making the high highs and high lows, we have to wait. This is the low, this is the high, this is the low, this is the high. Are you getting the point? We have to keep moving and monitoring the price. Exactly when the market come and break this low like that, it's now we say, wow, it's our time. Now we can see the market, it's have starting moving like the way how we wished. Are you getting the point? Like the market, how we do what? How we wished. We mark our structure like that. We wait the market to come and take it. Now we can see very well the market have takes this low. Before we take this low, we have take out this high. Are you getting the point? So when we take this high, this is what we have been expecting. We have been expected that the price, if it takes this high, we come back and respect this what? Respect this area, because this area now it has been what? It have been a resistance. When we break it, it have become a support, which means this, it will support the price to go above. But we can see that the price, when it reached here, it fails to take this high here. When the price failed to take this high, and then it came and breaks this area here, what we can see that this indicates a change of the character, and then we can see a break of the structure. This, you can see that this was our structure here was what? Was broken, because this structure here was too strong. But when the market breaks it, it shows that now the sellers, the buyers, they are no longer have the control of the market. Sellers, they are the one which are having the control. Now it's our time. This is only enough for us to know that now it's our time to look what? To look for the selling opportunities. This only, before this happens here, we have to see exactly this in the market only. This is what we need. This can tell us a big information. I have shown you how to read this area. You can see very well that when the market here came very well, made a high, made a low, and then we break this above, which means it is so that the buyers, they are still having the control of the market. Now we wait the pullback to respect this, which was a resistance, to come what? To come as a support. But when the market comes as a support, we can see that the buyer here losing the momentum, and also here the movement from this area to here is not equal from here to here. Are you getting what we can call the momentum movements? Are you getting the point? You can see also this movement and this movement and this movement here. The market, so the price shows us that the buyers, the people who are interested to buy this, assets, they are losing. They see now, now it's have overbought. Now I can't add more money to buy this asset. I have to wait. At least now the price of this asset is too high. I have to wait, and then it comes down. At least I can buy. Are you getting the point? When the price breaks this area here, we have to wait. The price comes back at least, and then to the low price, and then we can buy. Are you getting the point? So here we can have a low price, because it's like almost 50% to 60%. If the price moved up and then it comes again, here we can buy, because here price was too high. But if it have reduced a little bit, and then we can buy. But we see the people who are trying to buy here, they are not having they are not interesting of buying more price, because if the price did this and then does not take this high here, that one indication we have we have selling momentum status comes in, that the sellers now, people are starting comes in. Why? Now we are buying and then we are selling. For us, we are taking profits, and then people who wants to sell it, the price comes back down. Are you getting the point? So if you have bought here, the price comes up here, we sell, someone buys it, and then brings it down, so that they can do what? They can sell it. And when it comes to buy, we do the same way as we did on the selling way, because it is vice versa. You can see very well that the market here came and take this low, we take this high here, and then we look this area of insufficiency, and then we execute, we take the market upward. So that is what we all need to be looking for. Let me take you to the exactly in the chart and show you, a real example how the market moves and everything, how it works. All right, now here we have 75 1S index, the only pair which is being formed on the Deriv. You can find it on the Deriv broker. If you want to trade volatility indices, just the link, it is in description below. You can open the live trading account. Before you trade live, make sure you start with a demo account. This will help to master these assets, how they move, how the people value they are, stop loss where they are, take profits, how you should put them before you go live. First get to master and get used on them, the way how you can trade these volatility indices. The link, it is in the description below. Go and open your trading account and play the ground. You see how it works for you. And those who also love the currencies pairs, the link also it is in description. And also those who love to trade cryptos, the link also it is in description. So as well, we have here 75 1S, and then we are in minute 30. So we can see at around this area we have the market is making the lower lows and lower highs. Are you getting the point? As well, remember what I told you, that we have the major structure, what we can call swing structures, and we have the minor structures, what we can call intermediate structures. As well, you can see that these are the major structures. Are you getting the point? But inside we have here we have a minor structure. Are you getting the point? So this is the majors which are leading the price to go far, and then we have the minor structures which are noting the big move to be happen. Are you getting the point? Why this is minor? Because the price didn't break this high here. If this price could break it high here, this we could call it a major. But as well, the price failed to break high. Now we can call this it is a minor. Are you getting the point? We can call that it's a minor. As well, you can see that the market now, it's having making the lower lows and lower highs. So when this happens in the market, when that happens in the market, it tells us now we are looking for the for the selling trend. This is a selling trend. Now it's our time to identify when the price making the high and breaks the structure. We come back to the low to identify that price where didn't mitigate, and then we move with that area. So let me do like this. as well, you can see that when this happened here, the market made here a high, here we had a low, and then we break all structure like that. Here we had 1 touch, 2 touch, 3 touch, all of this, it is on equal one line where a extend like that, and then we can see that the market now, it's when what, it's when breaks that, and then we need to go to the upper trend. So before this break above, but the price made here the equal lows, and here we had what, a triple equal highs, but the price breaks these highs here. Also this structure which was broken, this is minute sat here, you can see that our area here, it was what, it was getting broken. We consider this area here because this one are minus here. Are you getting the point? So we have to take this, we don't take this one, we have to take this one, because this one, it's the major which leads to go up and break this area here. So we have to consider this like that. Our swing low like that, that it's one which was broken. Are you getting the point? So if this swing low here was broken downwards, now we know it's the time we have to wait also this up to be taken off. So if this up takes off, now this shows at us that the market now, it have changed its direction. So we have to come at around this area when the price is going up. We start looking for the insufficiency. So we look at the insufficiency to see that where the market did not came and retest, we can see that now everywhere the market was not what, retested. But if you can look at this area and we highlight this, our order block here, you can see that this area was retested. This is what I'm trying to mean. You can see that also around this area, that this area like that, that order block was filled. Are you getting the point? So we have to look at around this area here where is insufficiency, because now we have seen that now the price, it is moving to the upward. We have to look for the sales. If we can see that at around exactly this area here, it's when the price has not get filled. We can see that from here to here we have what, we have a favorable gap here. If we can do this from this week and to this week here, we have what, we have a favorable gap, and this place was not filled. Are you getting the point? If we can extend it in the future like that, that place was not getting filled. But where is our order block? Order block, we have this last selling candle here. This is going to be our order block. We mark there like that, and it's aligning on the same with what, with the favorable gap. So we can see that the market, when it comes and tapped in that favorable gap, including the order block, and then it goes above. So we don't need to sell exactly when the market taps exactly in this category and then we go above. That's when it comes that you have to read and master the asset that what you have to trade. So here, if this happens, you can see that this, the behavior of this market, when it comes and tapped here, are you getting, it has to move upward, and then it comes for the second time and it goes up. But if we can see very well clearly at this area, the price made a low and here made a high, and then we made a low. After made that high and low, you can see that we break this area here to come and tapped in to our mitigation point, or our favorable gap, or our order block. Are you getting the point? When the price hits there and then it moved, forming something like that, low, high and low. Are you getting the point? This is what happened here. And then the price moved upward, and then it break this area, what we can call a change of the character. So when does the change of the character stepped in? The change of character, this is when it steps in. If we can see here very well that this is when the change of character steps in. Here we had a low. Here we broke this area here, and then we come and break high. This is the first move here. It is what, a change of character, what we can call a change of character. Are you getting the point? But when the price breaks this above here, this is what, a break of the structure. It's when we consider a break of the structure. Are you getting the point? You can see how it moves. Are you getting that point? This is when we see a break of the structure. But the first, we had a change of the character. You can see here we had a push down and then another second push down here, which takes this low here. Are you getting the point? So this confirms us that now the price, it's ready to go up. Every time you have to know the characteristics of the asset which you are trading. You can see that after this formation happens and then the price moved from after here, tapped in, moved above, and then comes back again. When it comes back again, here we don't see any insufficiency down this side. It's why the price comes back inside and then it comes what? Comes upward. It comes upward. So if we can do like this, you can see that, let me delete this, you can see that the price, it's still also moving to the what? To the upwards. And this signal was given out yesterday. Hey, we moved for a good pips and I told everyone close everything. Yes, for those who are still holding, and they can still take this price up to this area. Are you getting the point? And then we target that high. But for me at this time, I'm not still inside of the market. So now let us move from that, the buying side. Are you getting the point? Let us look for the selling side, and then we are going to stay here, not moving here. You can see that exactly at around here, when the price was making the high highs, high lows, high highs, high lows. Are you getting the point? So which means at around area we had what? We had a buying side, what we can call a bullish trend. So if we have a bullish trend, so you can see that the price here did a big swing here from the buy side to the sell side. You can see at exactly where here we had equal highs here, and then they are not equal highs because this is low, this is high. We had a high, we had a low, and then here we had what? We had here a change of character. If you can see well, after that change of character, and you can see here also we had what? We had a break of the structure. Why it is a break of the structure? Let me do like this. It is a break of the structure because this was once a support and then it becomes a resistance. So this resistance, we were expecting it that the market, when it comes, it should be respecting it. It should be doing what? It should be respecting this area. So but unfortunately the price didn't respect that because we were expecting that the market, when it comes here, this will become a support and the market goes up. But it have failed to goes up. It have just break through this area. So if this area was broken, now this tells us that now it's time to go what? To start moving downwards. Now the price have moved from the buy side. We are start looking for the sell side. If you can see it very well, that after that we have to identify the insufficiency. So here, if we can move from this high time frame of minute 30 and then we go to the low time frame of minute 15, you can identify it. And this also works in a low time frame and high time frame. I didn't want to make this video to be too long to show you exactly for the how low time frame works and high time frame. You can see now at this area we are in low time frame and it still works as well. So for the quick recap, if we can come back here, you can see that the price also here made what? In the low time frame, you can see we had a high, had a low, had a high. We came and break this structure here, and then we came back to look for the insufficiency at around this side. And then you can see, I want you to take very well a look here and take action here in a low time frame. I'm winding. I don't want to make this video so long. You can see that at this area here, you can see this area here was retested, but this area here, it was not retested. This area was retested by this candle, but this candle here, it was not retested. Are you getting the point? It was not getting retested. That's why if we do like this here, you can see that if we waited the market exactly here, that when the price came and it mitigate this area, why? it was insufficiency. That is the only one which was left behind. You can see that the market came very well from this down, tapped in, feel that, and then it goes down. Yes, from the buying side to the selling side after this change of character and the break of structure has happened. You see, that is the example of the low time frame. I have covered it. I'm not going to repeat that. If you want to master this again, push the video backward and then listen again. This will be enough example to show you. So if we can continue with our illustration, so we can come here and we see that if we come in the minute 15 as well, you can see that why the price came up to this side. We can see that here we had insufficiency. If we can see that this area here very well, the market made a high, made a low, made a high, made a low, made a high. We came down here. We had what? A change of character here and break of the structure. Are you getting the overall point? But the market came this point here. It mitigated this area here. This movement mitigated this area here. You can see it very well that how we mitigate this area. If we can highlight this from high to the low side, we take this in future, you can see this movement, it is the one move down, come and mitigate this side, move, come back and move, but we left this candle which was not what mitigated. So if we can do like this, we highlight this area here. Let me use a line. We highlight this area like that. Are you getting the point? Like this. Let me delete this. You can see that the market came very well and tapped in, and then we move down. So where to put our stop loss whenever we using our pending orders? So this is how we do it. We have to do like this. Now we are looking for the sale. This is our order block where we have to be selling from. We come, we put our pending orders exactly there, and then stop loss should be above some pips. Me, what I do, the pro tips, you see the grade line which are inside. I see from where exactly the candle is. I'm using the grade line. If you can see in behind there the screen, if you can see them, but when you open your chart you will be seeing them. This is the pro tip what I use. If you can see that now this is the candle which I have marked. This candle, I can see where its end is on from. That is the grid line, and then the up one line. This is where I put my SL from the last closing candle. It's wicks here like that, and I look at the grid line, and then I push one bar like that upward. That will be the stop loss of me, and then I go back. I see where this movement started from. This movement where it started from, what I want to be catching. I can see that this move started from this area. So if it started from this area moving to upward, this was what an indication that the price is moving from this side, it's going to down. This is my execution point there. After executing around this area here, so I will take the price to the downside, or like this, up that area, like that area. But before I do that, I will find the insufficiency around this area here. It's when I will put my TP like that. I wait to see the market what we play. That is 1 2 5. You can see that the market came very well and did what, and did everything. So the price was moving very well, 1 to 5, huge. And then if we can come back to high time frame, you can see we to use a lot of dice when we are holding this price. If you have got value from this video, you don't need to miss any upcoming information which is like this. And if you want to take your trading career to the next level, make sure to hit that link and join the fastest growing community, and you will get everything massive there. Make sure to watch that next video. Catch up the next episode. Peace.